Hi, and welcome everyone to our next episode of First Generation Investors Executive Speaker Series, this one titled Professional Stock Investing. Today, I'm incredibly excited to be welcoming Steve Nguyen, Fundamental Portfolio Manager at Causeway Capital Management, one of FGI's fantastic supporters. Steve, thank you so much for being here. It is a pleasure to have you. To start us off, can you tell us a bit about yourself and your background and what you do now at Causeway?
Again, thanks for having me here. Really excited to be here today. So I'm from Los Angeles, born and raised. I'm currently working at Causeway Capital as a fundamental portfolio manager. So I'm overseeing research activities in both healthcare as well as the utilities renewable space. Just a bit about my background, how I got here. So I went to college at Brown University, majored in business economics, came back to Los Angeles to work. First couple of jobs in the industry were actually in fixed income. Then I got my CFA, got my MBA at UCLA here, and then I joined Causeway out of UCLA Business School about 10 years ago. I've covered a number of different industries in my career on the research side, ranging from real estate to insurance, energy, as well as parts of consumer. So it's been really great to have exposure to different areas. And I would say that one thing I really like about this industry is you're constantly learning new things, and the market's always changing.
Yeah, I couldn't agree more. I mean, I've been, looking at some of my own investments, over the last couple of years since I first started learning about investing, and just kind of seeing how the markets are constantly changing and seeing all the different opportunities and just different ways to make money in different industries. It really is incredibly interesting. So I'm totally with you there.
Yeah, absolutely.
So most of our students are learning about investing for the first time as part of the FGI program. And I know I got that, investing bug when I first started learning about investing in college. So can you tell us a bit about when you first learned about investing and what about it made you get that investing bug?
Yeah, I think one of the great things about this program is that people are learning about this so early. For myself, even though I did major in business economics in college, wouldn't say I really learned a whole lot about the investing industry or about investing in college. I actually initially, when I graduated, I wanted to work in the nonprofit space, and I just couldn't find the right job there. And
Sure.
I ended up working in fixed income, which is bonds, and that's again not necessarily a space that people look to work in out of college. And I don't think I really learned a lot about bonds in college, and so everything was sort of learned on the job. As I got more into looking at companies, and so looking at initially it was corporate bonds for investment grade companies, looking at high yield or junk companies, and then eventually at Causeway looking at equities. That's really where I guess the investing bug bit me. And it's in terms of doing all the research work on a company, learning about what makes it work, and developing a thesis, and then following that through up until the time where either it works or it doesn't work. And that, I think, was addictive to me, just seeing that process playing out, and seeing how you could translate the research that you've done into action, and seeing thesis play out.
Yeah, I'm totally with you. Even doing research in something like the private markets or even in the equities and stocks and the public markets, I've always found that, I'm totally with you there, that being able to do that research and seeing that come through to a final investment decision and feeling like, all of your hard work and everything you've learned and all that research you've done is now coming to a big decision that, hopefully pays off in the long run.
Yeah.
Great. So FGI works with a number of different partners that do a number of different things across the business and finance realm. So can you share a brief overview of what an investment manager is and what exactly Causeway does?
Yeah, so an investment management company broadly is a company that manages client funds, and then we just seek to earn an attractive investment return on those funds over the long term. Now, stocks, public markets in general are very complex. The investable universe is huge. There's literally thousands of companies that we can invest in. So that's why people will seek professional investment management companies like us to do the heavy lifting. We have 100 employees. We have 36 investment professionals. So we have a lot of resources that individual investors really don't necessarily have access to. We get to meet with companies and speak with experts and analysts. And so I think that's why people look to investment management companies to do this. Who are we working for? So our clients are mostly institutional investors, not individuals, although we do have some high net worth individuals as clients as well. So when I say institutional investors, think pension plans or retirement plans of corporations, government organizations like municipalities, unions, so like firefighters, teachers, policemen. And so, really, we're just trying to invest their money in a way to achieve an attractive return, but also in a good risk-adjusted way. The way this also works is that these clients, they'll have diversified portfolios. So they're allocating their capital to equities, but also to bonds and to some alternative asset classes. And then within equities, they'll also allocate capital to different areas. It could be domestic equities, it could be international equities, different styles, growth, value, large cap, small cap, et cetera, and regions as well, emerging markets, developed markets. And so, we're just a small part of that sliver where these clients want to allocate money mostly on the international value side. That's where Causeway fits in. That's sort of our niche.
Great. Yeah, that totally makes sense. So you'll have this more or less niche range of clients that are looking to invest in a pretty niche type of investment. And that's more or less where you specialize and I guess make your return and kind of separate yourselves from the other, investment managers, right?
Yeah, and I would say, a lot of investment managers will offer different products and we offer different strategies or products as well. And so, maybe in a best case scenario, you have different sleeves of a client's allocation, or you have different clients in different products. But I think what makes our business sustainable is that, clients in general are going to be seeking to have a diversified portfolio. And so you're never going to see a flow of money entirely out of one asset class or one area and entirely into a different area.
Yep, makes sense to me. So moving into some more, knowledge or I guess technical focus questions. From what I understand, you as a portfolio manager spend a lot of your time researching different companies and different stocks and deciding how much and when to invest in each. So what process do you take when researching and evaluating different stocks and that you intend to invest in for the long term?
Yeah, so this the research process that's the fun stuff. That's what we all love doing, and we do a lot of other things in our day to day, but the nitty gritty of getting down and doing company research is really what I enjoy the most and what my colleagues also enjoy the most. So our process, this could take anywhere from several weeks to several months, just depending on how well we know, say, the industry or the company that we're looking at. But basically, it involves things like, the first thing is just reading up on the basics, looking at company documents, research reports, learning, what the company does, how they make money, how the fundamentals of the company work, how the fundamentals of the industry work. And then talking to management, not only the management of the company you're researching, but also of competitors, just to get different perspectives. Speaking with industry experts, just to also get different perspectives on what the company is saying or what competitors are saying. And speaking with other analysts, we have access to analysts both on the sell side and on the buy side. So it could be our competitors, or it could be analysts that are providing research to us from investment banks. And then the process moves to actually sort of putting our thoughts down on paper per se. So we write up a detailed investment memo where we talk about not only what the company does and the fundamentals, but also the positives of the company, the investment merits. So what are the competitive strengths of this company? Where are the areas of upside that aren't really appreciated by the market? What are some of the growth opportunities? Where could there be valuation dislocations? And also certainly what are the risks? What are the negatives? Where could the thesis go wrong? And so we'll put all this together into a write-up. We'll present it along with a detailed financial model. We do projections and different scenario analyses, and we'll present it to our entire group. So it's generally 20 or 30 plus investment professionals. Used to be in a real room, now more in a virtual room. And there'll be a lot of back and forth, a lot of debate. And at the end of this overall process, we come up with a price target, basically what we think the company will be worth in 2 years. And this company goes on to what we call a rank sheet, which is sort of our list of stocks that we've done all this research on. And it's our short list of stocks that we want to buy at the right time. And when the return to our price target looks attractive, and when that's coupled against, we have a risk score as well that measures the potential contribution to volatility from the stock. So risk is also important. So when that all aligns and the risk adjusted return is attractive, that's when we'll look to buy the stock.
Great. Yeah. So pretty long, extensive process. How long does that whole process take typically?
So it really depends. If it's an industry that we know well, and maybe we've already invested in a company similar to the one we're looking at in the past, then it can be relatively quick. It could be a few weeks. But If it's one where there's a lot of moving pieces, there's a lot of uncertainties, either on the macro side or on the company specific side, it requires a lot of due diligence, a lot of digging, a lot of conversations, then it could take months.
Got it. Yeah. So I guess as a follow up to that last question, you just went over, the overall process of how you go about picking stocks. What would you say are the top 3 qualities a first generation investor should look for or take into account when looking at potential stock to invest in?
Yeah, so I think the number one that I would point to is valuation. And Causeway is a value manager, and what that means is not that we're only looking for companies that are trading below certain multiples, but we always consider valuation. It's not enough for us to just say, hey, this is a company that's in an attractive space. We think it's going to grow a lot. We want to buy it. It's always coupled against, well, what's the stock market already pricing in, right? So no matter how good a company is, we think a stock could be a bad investment if it's overvalued at the point in time which you buy the stock. So you always have to start out with thinking about what's priced into the current stock valuation, coming up with a framework to figure out what's priced in and what should be priced in, what you think it's worth, again, in a couple of years' time. So I think valuation is a starting point. Management is also really important. Just can you trust the management team to execute on the strategy, to do the things that you're hoping to do, to compete, to manage risks. Allocating capital efficiently is huge. So, if you don't trust management and they make a massive value destructive acquisition, then that can definitely destroy the thesis. And then the third one, I think, so besides valuation and management, would be visibility. And what I mean by that is you need to be able to understand how the company works. You need to be able to understand the drivers of the business, and you need visibility into the expected growth or your forecasts. And so if there's too many uncertainties and you don't understand the different moving pieces, then you're not going to be able to have confidence in your overall thesis.
Yep, I totally agree with that, definitely. So valuation, management, and visibility, those are definitely some really good, I think, qualities to look at, and I definitely agree with you there. So I'm sure that even though, certain investments are meant to be, some of these investments you're looking at are meant to be longer term investments, I'm sure there are a few times where you feel that it's time to sell and get out of one of those investments. So as a portfolio manager, how do you decide when it is the right time to sell a stock that you initially, bought as a long-term investment?
So the first one's going to be the same as the previous question. That's valuation. So I think if you're focusing on valuation as part of your initial thesis, then you have to constantly monitor valuation when you're thinking about when it's time to sell. So, if all goes well, then the stock is outperformed. And if it outperforms to such an extent where the valuation exceeds, by a good measure, your estimate of what the stock could be worth, and if there's no fundamental change that would cause you to sort of increase your price target, then you have to be disciplined and you have to at least reduce the position, if not sell it entirely. So you're always trying to maximize the risk reward in your portfolio. Stock has done too well and it's no longer attractively valued, move on to the next stock that does have an attractive valuation. The next one is a thesis change. So again, it requires discipline. You go in with a certain thesis on a stock. If there's a massive change to that thesis, then you have to sort of rethink, and you shouldn't have the bias of, well, I already own this stock, so I have to hold on until it recovers. Would you put new money into the stock if you didn't already own it? So whether it's a new risk factor that you weren't aware of, like in this kind of environment, and all of a sudden inflation is huge. And so what if there could be a structural decline in the company's margins, or maybe the management team is not executing, so that wasn't a previous risk that you'd considered. So always consider if your thesis has really changed. And then the third one, again, this overlaps with the previous answer, but I think management, again, if you can no longer trust management to execute, or if they've made a bad decision, then you have to reevaluate, and potentially it could be time to sell the stock. And so the most obvious example of this is when a management team makes a large acquisition that could be transformational, but in a direction that you're not comfortable with. So that would change the thesis. That would certainly change your view of the value of the stock. And that could mean it's time to sell the stock.
Yeah, for sure. All definitely great important factors to keep an eye out, and I think the viewers are definitely going to be taking a note of that when they're making their investments and looking at when to potentially get out of those investments. So moving on, so some students at FGI all students in FGI, excuse me, are in high school when they enter the program. And as I mentioned earlier, many of them are learning about investing for the first time, and they often come out eager to learn more. So as a new investor, what steps do you think one can take to learn more and better understand the stock market in order to make some better investment decisions?
This one, I think, at least in my personal experience, so some investors have an incredible memory and can remember everything and do everything in their head. I'm not like that, and so for me,
Maybe
and I've been in this space for long enough that I've seen a lot of things and I can't remember everything that I've seen or heard, and so I take really good notes. I think that's really important. And as I mentioned, part of investing is you're always learning new things. Things are always changing. So if you've documented your journey and you're taking really good notes and you're constantly thinking about not only what you're thinking about a stock or a topic, but also what others have told you, that's always something you can go back and you can revisit, similar to on a stock basis, revisiting your thesis. And so that's, I think, probably the first step that people could take, is just taking really good notes of your thesis, of your assumptions, and then when you do sell a stock, whether it works out or not, just think about what went right, what went wrong, and figure out what you could have done better. The second thing maybe is just you have a lot of information that's thrown at you from a lot of different areas. Seek information from a broad range of sources. So don't get too tied to one source. Look at different, whether it's news sites or research sources from different research providers. We read a lot of research from, say, investment banks. You can't get too wedded to a single analyst. You have to listen to different viewpoints. Look at different industries as well. So I think there's some value to specialization in certain industries if you're looking at certain types of stocks, but it also really helps you as an investor to learn about different sectors, different industries, different parts of the world, and just constantly seek counterpoints to opinions that you've gotten.
Got it. Yeah, I totally agree with you there. And I think especially want to highlight that, look at a broad range of sources. I do think it's very easy, find one source you really trust and stick to it. But obviously we know that sources can sometimes be biased. So being able to get a broad range of sources and really kind of widen the information and the source of the range of information you're getting, I think can definitely have a lot of merit to that. So I'm definitely with you there. So as I mentioned earlier, students tend to leave the program eager to learn more about investing and finance, and plenty of them actually develop an interest in pursuing investing as a career. So for the students looking to do that, can you tell us what a day in the life would look like of a entry-level analyst at Causeway?
Yeah, so our days definitely vary a lot. It depends on the time of the year, what's happening, and we could have certain days where just meetings take up the entire day. But if I had to generalize a typical day, I think one thing is that as an analyst, you're going to have accountability. You're going to have certain stocks or industries that you're responsible for. So the first thing you're going to do when you walk in and you turn on your computer is you're going to check your watch list of stocks, and you're going to see which stocks are up, which stocks are down, and you'll note why. And especially if there's some outliers, some big movers, you're going to probably do some initial research and just figure out what's going on in the market, and that happens every single day. And especially if you're looking at global stocks like we do, then kind of no matter what time of the day you're looking at it, there's all stocks moving around. Next thing is you'll go through the news and the research that's come across. So it could be either an email form. We get a lot of research and news emailed to us. It could be looking at specific research that we're tracking for certain holdings. But again, especially if you're focused on certain companies that you're responsible for, you have to focus on important updates for any of these stocks, whether it's impacting the stock price today or if it could impact your thesis going forward. And typically we'll also kind of write up notes on important news items, share it with the rest of the group. If it's earnings season like it is now, so right now companies are actually reporting first quarter earnings, then a lot of the day-to-day work has to do with earnings updates. And so, since a lot of our process involves, coming up with detailed financial models, we want to make sure those models are updated from quarter to quarter or whenever companies report. So that involves not only plugging in the numbers and changing the model, but also listening to conference calls, again, reading more research, listening to calls from competitors. And so there's that whole process of updating earnings. And then if it's not earnings or if you have spare time, it's always working on new ideas. And so there's a sort of, there's a new idea velocity that you want to keep up. You always want to be looking at new companies, and there's plenty of companies in your investable universe. And so you always want to be thinking about new companies. You could start out by screening for new ideas. So we have different ways of screening for opportunities, whether it's companies that have underperformed or looking at certain metrics that might pop out of our screens. And then going through the whole process that I described earlier of learning about a company and writing it up and thinking about valuations. And then, most importantly, it's this interaction with others. So we're right now at Causeway, we're back in the office a few days a week, but also
Oh, that's great.
we're working from home where, we're on Zoom or Teams. And so a big part of this process is just, speaking with your peers, other analysts, other portfolio managers, sharing what you're seeing out there, what you're thinking, and also attending investment pitches from other analysts and portfolio managers, and then sharing your feedback when people have new ideas. Maybe the last bit also, as I mentioned, meetings. So companies come through our office, companies that we could invest in or are tracking. So we'll meet with them, in some cases now virtually as well. So we have a lot of those, and analysts as well. So industry analysts will offer up meetings, or we'll seek those meetings. And so we do have throughout the day a number of interactions, either with companies or analysts.
Wow, that seems like a pretty packed day, especially for someone just learning for the first time. That seems pretty amazing. So really focus on research, focusing on some of the existing investments you already have and updating those models and that thesis, while also exploring new potential ideas and investments. Seems pretty extensive, and honestly sounds like a great gig. So that's great. Well, Steve, this has been, fantastic. Thank you so much for being here and taking the time to be with us and sharing your knowledge and expertise with the entire FGI community. To tie the knot here and wrap up our discussion today, what final advice do you have for a first-generation investor?
Yeah, it's there's a lot of things I think that I would offer as advice, but if I had to isolate them to a few things, I think the first would be just seeking guidance. So, I'm really excited to be here because I love my job, and I think most investors feel the same way. They love teaching people about investing, and they love helping others succeed. So, just utilize your network, and I think with FGI, people will certainly have a great starting point as a network. So, just seek guidance in your career going forward. Stay curious as well. So, one of the great things about this industry is that you're always learning. And so just keep up that ambition to constantly learn new things, never get complacent about what you know, and just constantly challenge yourself to learn, whether it's new companies or industries or themes or just even new skills, right? So, maybe you have a baseline on financial skills or accounting, or you can learn more about Excel or about programming. So there's always things you can do to improve. And then the last one would just be to stay skeptical as well. So I think as someone in research, what really differentiates us from someone that's more of a casual observer is that we really dive into things and determine what can be trusted, what can't be trusted. And so every opinion you hear, every viewpoint you hear, whether it's from the CEO of a company or an analyst or even one of your peers, always be skeptical and think about, well, what could the counterpoint be? And it's not that that person's going to be 100% wrong, but they're also probably not going to be 100% right. So always think about where there could be things that you have to do more research into, and that's where I think you can always add value. Is just do that detailed work and come up with your own view.
Yeah, for sure. And I definitely want to highlight that second one you mentioned, that stay curious. I do find that finance and investing is one place where you really never know it all. And even if you feel like you do, you understand an industry really well. It is also an industry that is constantly changing. So there's always new developments, there's always new things, coming up. There's always new changes in the markets, new changes in the industry, new changes in a company, and being able to just stay on top of those and constantly learning, staying updated and learning new things along the way, I think is a really important tip to give some people who are learning about investing for the first time, and something I'm still trying to get a hold of myself. So definitely a great one there.
Yeah, I've been doing this now for almost 20 years and still learning new things every single day. So it certainly helps you stay humble.
Yeah, for sure. That's a great one. Yeah, well, that kind of wraps it up here. Steve, again, thank you so much for being here. Causeway has been a fantastic partner throughout the time they've been with us. And we're really grateful to have you here, sharing your insights, your expertise, your knowledge with everyone here at FGI. So thank you again for being, an amazing supporter and taking the time to be with us today.
No, thanks so much for having me.